Welcome back to Fast Money. The retail wreck rages on. The ETF tracking the group, the XRT, falling 3% today, is now in bear market territory. Bob Pisani is at the New York Stock Exchange with all the details. Hi, Bob.
Hello, Melissa. It's another ugly day for retailers. We did this on Tuesday, but it's happening again. Big brands like JCPenney, Best Buy, Kohl's, Macy's, Gap down 3 to 8% just today. Shares of Costco also falling after hours on a top and bottom line miss. Tailored Brands, which owns Men's Warehouse, was the downside leader, reported weaker sales and lowered full-year guidance. It was down 30% at one point. Ay. Plenty of retailers are sitting at or near 52-week lows. Children's Place, Best Buy, Tiffany, Signet Jewelers, auto sellers like AutoNation, Penske Automotive, Group 1 Automotive, all near 52-week lows. The retail ETF, Melissa mentioned the XRT, that's a basket of all the retail stocks in the S&P 500, also at a 52-week low, and that is also among the most shorted ETFs on the street. So what's the problem? Well, Amazon, of course, is an issue, but retailers rose in the summer on signs that the retailers were getting better at playing the online game. Online sales are indeed growing faster for all these companies, and the companies, though, need to invest in both stores and in online. That's a problem. It's expensive, and it's increasingly hurting margins. That's probably the biggest issue. Then there's the macro issues. The concern is that this may be as good as it gets with comp store sales, which did improve this year, and even broader concerns that we could be in the later stages of this big upswing in consumer spending that we saw this year. You add in other things. You add in the high labor costs we're starting to see. You add in additional transportation costs, and it means not a lot of earnings growth with a corresponding drop in margins. Real tough situation. Back to you, Melissa.
Sure is. Bob, thank you. Bob Pisani at the NYSE. So are any of these names worth buying on the dip, and what's behind this decline that we've seen? Karen, what do you think?
Well, Tailored Brands, I sort of put that aside.
Sure.
But Oxford, I don't put that aside. I mean, that is a real read-through to a Macy's, a Kohl's, whoever. Very disappointing. Although Macy's, to me, Macy's has been really getting its act together. The balance sheet, think how improved the balance sheet is over the last couple of years. And I think they're increasing even more the debt buyback. This multiple of, 8 just seems really overdone to me. Not that it can't go lower, it certainly could. But, of that sort of today's du jour disasters, I think Macy's, which I do own, I would be a buyer of Macy's.
Yeah, so listen, it's all a disaster. I mean, I think Bob really surrounded that trade. I mean, he gave you everything. Here's the thing. I mean, so the rally over the last year before they topped out about 6 months ago, it had to be that they're getting their houses in order. They made these investments in omnichannel, and they're starting to see a lot of growth. Here's the thing. Less than 10% of U.S. retail sales are e-commerce. Amazon is getting 50% of all of that growth. So no matter what those investments that Target, Macy's, all these guys made, they're going to continue to do it, and we're going to continue to see weak margins. We may be at a point where we're seeing peak consumer spending. They could be.
I'm only on that 10% because that's always shocking to me when you hear. I always think it's more than that.
Okay, but Steve, can I just add one point?
No,
so the biggest e-commerce player, though, just got a government subsidy to open 2 headquarters on the East Coast. All these guys who've been spending all their money, it's been hurting their margins for the last couple years. They have to compete with a government-subsidized Amazon.com. That's crazy. So to me, I think it only gets more difficult.
I think these guys are just canaries in the coal mine. They're consumer-facing, and I think they're signaling, as you said, the top of the shelf, there's something wrong with the economy.
All right. For more on this retail wreck and which names are looking like bargain buys, let's go off the charts with Todd Gordon of TradingAnalysis.com. Hey, Todd.
Hey, Melissa. Sure, let's take a look at the XRT. You guys were talking about double tops earlier, Guy and Grasso. I've got a good one for you here in the XRT. Just at about 52 here, we put in a big old nasty double top, and we've begun to back away. This was back from 2015. So sorry about that. You get the point. How significant is this double top, and will we continue lower? This is the weekly chart. What I'd like to do is then drill down, get a little bit more granular here on the daily. So here's the XRT on the daily. And what you'll see here is we do have some lows right at about the $43 mark here. This is also one of those fib retracement levels. We are trying to hold. I don't think we're going to. We look like we're going to head lower. There's one more level just at about 40.5. I'll save you the gory details. If you don't hold 40.50 and XRT, I think we go lower. I'm going to stay right here. XRT, SPX, maybe if we could go back, that ratio is also in the decline. Basically what that means is the XRT retail is underperforming the S&P on the downside. That's okay. We'll stay here. I say it's weak. As a trader, I want to continue to short and step on these weak names. L brand, just what a disaster of a chart here. 200-day moving average in a clear downtrend. We tried to hold as resistance. We have held as resistance. It looks like we should be able to move down. If you guys go out to your weekly charts, look back at 2000, 2007, 27.5 was a huge breakout level. We really need to hold here in L brands. If we don't, you're talking 18 years of support that was just lost. It looks like if the overall market moves lower and retail, L brands could continue to go. Kohl's, really, really strong stock. This guy put a big old triple top in here. I hold this in my portfolio. We broke the 200-day. We're coming back to kind of retest as resistance. I was talking to Karen about this in the makeup room. I might need to KSS this stock. Goodbye. This guy looks like we should not be long, but in fact, we should be short. So I say stick on the short side of the retail in a very uncertain market.
How does Amazon look compared to the retailers?
Amazon doesn't look that good either, and we should be recovering. But for me, I'm actually looking to set up shorts. I see Amazon, I hate to say it, but from a technical point of view, beautiful. From a technical point of view, Melissa, if this market moves lower, and I don't even want to say this, I'm going to get skewered on Twitter for saying this, but we don't have support until about $900 in Amazon.
What?
If we, yeah, I mean, I'm not saying it's going to happen. From a technical point of view, if we continue to go lower, that's where, from a chart point of view, support would come in. I'm not saying it's going to happen, but Amazon is not performing the upside like we'd expect to see in this period of tech outperformance. It's technology that is not leading us lower. It's tech that's actually holding us up right now. But Amazon just does not look good for me on the upside. I would not be buying here.
So when a technician like yourself says $900 is support, like what has to happen for a stock that's $1,600 and change to go to $900?
I know. It's scary, and the same. I have the same conversation with myself on Apple. If I take a cold, hard, objective look on Apple, is we can't get any kind of bounce off of 170. We don't have support in Apple until 140. I mean, granted, $30 as a percent of 170 is nowhere near that drop in Amazon. But if this market can't get a bid soon, there's much lower levels to come. I'm not trying to be controversial. I'm not trying to scare. I'm just trying to be as objective, trade what I see, not what I think. And technical support doesn't come in for a ways lower. S&P 2400, 2350. That's where you start to hold the uptrend support that's been in place since the credit crisis low. If you don't hold 2350, and I know Grasso's looking for a push
down. If we break the February
that
lows on the S&P 500, then the next stop for an Amazon is a 900. The next stop for an Apple is 140.
Yeah. I mean, I'm not saying we're going to go to Amazon.
Sure.
I'm not saying we could find support. That doesn't mean if we break 16,
right,
we're going below 1,000 in Amazon. But I'm just saying from a technical point of view, that's where support comes in. Again, the S&P, if you don't hold 2350 on any push lower, that's big trouble for this market.
Todd, thank you. Todd Gordon of TradingAnalysis.com. Guy Adami.
Yes, Melissa Lady. By the way, at the top of the show, I welcome you back. I'm thrilled that you're back. People on Twitter like you weren't that effusive in your. I mean, yes.
Well, there were
welcome back.
There were no balloons or confetti, so maybe
Fair
you
point.
weren't effusive.
Fair point.
What do you think of Todd's calls?
I think, it's interesting, the retail sector. Dan Nathan talked about the XRT, I think a year or so ago, said it's the worst chart he'd ever seen in his career. Something stuck with me, though, during Bob Pisani's hit a few minutes before Todd Gordon, and he mentioned Costco. Let's talk about Costco, because it's been everybody's darling. But now you look at it, and all of a sudden, people are going to say, does valuation matter? Because now, at 27 times forward earnings, after this quarter where on the first look, looks like they beat on EPS, but then you drill down a little bit, they actually missed. Margins were lower. Membership fees disappointed. One has to wonder, this was a vital cog, in my opinion, in the whole retail space. If you sort of lose Costco now, you've got to start to rethink things. And at 28 times forward earnings, this quarter is not going to get it done.
What do you think of Amazon to 900?
So the Amazon call is really interesting. So let's take the 900 out. Let's see where it started the year. It's $1,200 or so. This stock is still up 42% on the year. What I think is most important to marry with that fundamental look, and especially the more macro look, if the market were to go, let's say, break the lows and go to 2350, and then if this also happened in late January when Amazon reports their Q4 results, that they guided revenues down. They gave guidance in October that was revenue guidance that was 5% below consensus. If they don't hit that and guide down again, this stock's going back to 1,200 in a weak market. It's just that simple. That's how you marry these inputs together. And I don't know what's going to happen. There are a lot of things that have to happen for that to happen. But this stock's still up 40% on the year.
So when Todd talks about support levels, and he talks about that, he's talking about long-term support levels. There's a bunch of support levels, but they're short-term support levels. So it's 1,400, it's 1,325. So there's a lot of speed bumps on the way there. But if we do break the lows, the 2532, we do go to 2350 in the S&P pretty precipitously, and it takes all of these high flyers that are still up way down with them.
Great haiku word, by the way.
What? Precipitous?
Precipitously.
Oh, yeah. It's a whole line in
It's a whole
itself.
line in
Thank you.
haiku.
Yeah.